Most people think they're broke because their job isn't paying them enough or their rent is too high. But what if I told you that's not the real reason why you're broke, but it's a cost almost everyone has, but also that no one pays attention to. And over time, it quietly takes more and more out of your wallets than almost anything else that you're paying for. And no, it's not your coffee. In this video, I want to zoom in on that cost and explain why it's so easy for people to underestimate, while also showing you that once you understand it, it can free up thousands of dollars a year for you without even affecting your quality of life. Real quick, before we get into it, make sure you guys smash that like button, subscribe if you guys haven't already. I make videos all about money, building wealth, and getting rich, so if that interests you, consider subscribing. Okay, have you figured it out yet? Here, let me help. Even though our lives all look different, most of us spend money in the same exact places. We all pay for a place to live, we all buy food, we all cover basics like utilities, insurance, and taxes, and those categories don't change much from person to person. But what does change a lot from people to people is transportation, specifically car ownership. That's the category where the gap between people gets massive. One person can spend between $200 to $500 a month on a car payment, while someone else can spend between $1,000 to $2,000 a month. And the thing is, both people think that's perfectly normal. That's why it's so easy to miss. But when you take a step back and look at where the biggest differences show up between people who feel stuck and people who don't, it's almost always their car. As a society, we treat cars like a status symbol, something that signals success. We congratulate each other when someone gets a new car. We post it on social media and everyone says congrats. And now I get it, it feels good, but most people aren't stopping to think about what that actually costs them in the long run. And what's wild is how normalized it's become in the modern day. Right now in 2025, the average monthly car payment for a new vehicle in the US is $772 a month. And used car, that's $570 a month. That's absurd. And it gets even worse when you zoom out and look at the full cost of ownership. According to AAA's latest Your Driving Cost report, the average American spends about $11,577 a year to own and operate a car. That's nearly $965 every single month once you include things like depreciation, fuel, insurance, maintenance, and other fees. Now put that next to the average salary in the US of about $50,000 a year. That means roughly 22% of your yearly income is going towards a vehicle. 22% on something that goes down in value. And yet, because everyone does it and because it's socially accepted, we rarely think of car ownership as being a financial problem or as one of the biggest things quietly keeping people broke. Let's actually break this down and look at where the money really goes when you own a car, because once you break it into pieces, it becomes obvious why it adds up so fast. So to keep this realistic, I pulled up a 2020 Toyota Camry as an example. This isn't some luxury car, it's reliable, it's practical, and it's probably one of the most common cars people buy. And even with a practical car like this, the numbers, well, let's take a look. Over 5 years, the total cost to own and operate this comes out to roughly $36,700. That's close to $7,340 every single year. Now, I want to be clear. I'm not saying owning a car like this means you're irresponsible. A Camry is a solid car, but what I am saying is that even the responsible choice can cost a lot more than people realize. And that gap between what we think it costs and what it actually costs is where dreams get stolen. Now, let's break down where all that money is actually going. The biggest hit is depreciation. Over just a few years, roughly $10,291 of its value disappears into thin air. Not because anything broke, not because anything went wrong, but simply because time passed and that car got used. That's the part most people overlook. Cars don't just sometimes lose value. They're designed to always lose value. The moment you buy one, the clock starts ticking. Wear and tear adds up. Newer models come out, your mileage goes up, and no matter how well you take care of it, the car becomes worth less every single day that you own it. That's also why dumping a ton of money into a car up front is usually the dumbest thing you can do. I see people throwing money on their new cars by buying new tints, exhaust, rims, a whole bunch of things, decking their car out. For what? That stuff doesn't add any value, and if anything, it actually hurts resale value as well. Now, I know some people just need to buy a car because they have to. So if you do need to buy a car and want to minimize the damage or the total cost that you spend, the smartest move comes down to when you buy the car, because new cars take the biggest hit when it comes to depreciation. The moment you drive it off the lot, you instantly lose 15 to 20% of its value. Now, after the first few years of ownership, that drop slowly starts to slow down. That's why the smartest time to buy is usually when a car is between 3 to 5 years old. By then, most of the depreciation has already happened, but that car is still modern and reliable and nowhere near the end of its life where it's going to cost you a lot of money in repairs. Personally, what I like to do is buy a car that's between 3 to 5 years old, around 30 to 40,000 miles. A good rule of thumb is 10,000 miles per year, but this one timing decision alone can save you thousands of dollars. Okay, now the next cost most people don't think about is taxes and fees. This is one of those categories where you honestly can't do anything about it. Every car comes with registration costs, taxes that you have to pay, and recurring yearly fees. Even if you don't use a car, these are costs that you have to pay year over year. Now, where this really starts adding up is for people who own more cars than they actually need. Whether you're a family or individual person, you can only drive one car at a time. Sometimes I'll see, a person have 3 or 4 cars when they can only drive it one time. I mean, what's the point? Every extra car quietly racks up extra costs for you. You're gonna have to pay registration, renewals, inspections, and it might not feel like a lot because they're only like $50 here, $100 for this registration. But over time, stacked every single car over years, those can add up to thousands of dollars that you're paying for cars that are not even being used. This is one of those areas where the only real thing you can do is have less cars, because less cars means less recurring costs and less bills that you have to think about. Okay, the next cost is financing, and this is where a lot of people quietly lose money without even realize it, because not that many people can buy cars with cash. It's not something a lot of people can do. No one has $30,000 to $50,000 just lying around. So what usually happens is someone will go into a dealership to buy a car, but they put down a few $1,000s, maybe $5,000, $10,000 depending on the car, and then a bank will finance the rest. And this is where the real cost sneaks in, because when you finance a car, you're not just paying for the vehicle, you're paying for the time it takes to pay off in interest. And with interest rates where they are nowadays, even people with really good credit are often looking at rates around 5 to 6% or sometimes even higher. And if your credit isn't good, that number can go up really fast. I've seen people paying up to 15% interest on their car payments. And over the life of the loan, those interest payments can add up to thousands, if not tens of thousands of dollars for a car that's already losing you value every single year. That's why financing brand new or expensive cars is such a dumb move. The best thing you can do is just buy, like I said, a slightly older vehicle or a less expensive car. Now, no matter how you pay for your car, whether you finance it or you lease it or you own it outright, the next cost is always something that shows up, and that is fuel. This is one of the most underestimated parts about owning a vehicle that people don't take into account. People usually think in terms of their payment. I hear everybody always say, oh, my car payment is only $500 a month. Oh, it's $600 a month. But that's only one part of the picture. Where it gets overlooked is the gas. It's the money that quietly leaves your bank account every single week without people even realizing, because they have to pay it. And when you add it up over time, that's not a small number. For a normal everyday car, the total gas payments can come up to almost $10,000 across 5 years, which works out to being about $200 a month, assuming you drive an average amount. And that's for nothing fancy, just commuting, errands, and normal life. Over time, that can add up really fast, especially if you're putting in premium or if you live in an area where gas is expensive. Now, there are ways to completely avoid this cost or even reduce it significantly. Number one is by you can be smarter about where you fill it up. For example, if you go to places like Walmart, Sam's Club, or even Costco, their gas is usually cheaper, or you can even sign up for rewards for your local gas station. That can rack up rewards and save you gas over time as well. You can also use gas cash back apps. I use an app like Upside and noticeably cut down my gas costs. It's super simple. You just pay and then they give you cash back as real cash when you buy gas. I think they're even giving extra 25 cents off each gallon on your first fill up. So if you guys are interested, I'll put a special link down below if you guys want to save on gas. Now, next up is going to be insurance. This is one of the most sneakiest costs that you're going to have to pay. For a basic car like this, insurance can easily add up to being about $5,000 over 5 years, which works out out to being about $100 a month. Now, that's a fixed cost you have to pay every single month no matter what. And that's assuming you have a clean driving record. If you even had a ticket or some accidents, that number can jump up hundreds of dollars a month. But just because insurance is required by law doesn't mean that you have to overpay for your insurance. Most people overpay for their insurance simply because they don't shop around for cheaper options. Personally, once a year, I put a reminder on my calendar, and when that date hits, I call my insurance company and ask them one simple question: can you lower my rate? Sometimes they do, sometimes they don't. And if they don't, that's when I start to shop around. Insurance companies all do the same thing, and they offer the same coverages, and they know that long-term customers are valuable. That's why you see so many insurance ads. Because of that, they're often willing to undercut each other just to win your business, and you pay them. So I'll just take my existing coverage and compare it with other insurance providers to see who's willing to give me the best deal. And doing this once a year has saved me hundreds of dollars and sometimes even thousands of dollars, and it really starts to add up. It's something I highly recommend anyone who drives a car, because you should not be overpaying for your insurance. Now, the good news is with insurance, you don't even have to call every single company like how I used to. There are tools out there now that actually let you compare all the cheapest insurance options for you in your area in just a few minutes. It's helped me and some of my friends save hundreds of dollars a month, and I always recommend at least just checking, because you'd be surprised as to how much you could possibly save. If you're interested, I'll put the link to the one that helped me down below. Now, the last two costs to talk about are repairs and maintenance. Now, these are a little harder to eliminate, but they're not impossible to reduce. What's changed over the last few years, and what I love about, is your access to information. With YouTube and a few basic tools, a lot of routine car maintenance is now doable for a lot of people without having to spend hundreds of dollars. Take something like a simple oil change. Learning how to do it isn't complicated. A short video on YouTube and a little patience is all it usually takes. And once you figure out how to do it, those savings can stack up really fast. Each oil change that you do yourself can easily save you a couple $100s every time you do it. But hey, I get it. Maybe working on vehicles isn't your thing. You don't like to get dirty, you don't like to do all that extra work, and you don't like to figure that out. Well, you can use sites like Groupon or other coupon sites. Plenty of local shops offer oil changes for 20 to 50 bucks as a promotion. You don't have to always go to the dealership and pay their huge $200 markup for routine maintenance. Now, the last and honestly most powerful option in all of this is if you can live without a car, even temporarily, it completely changes the math. Because let's say you don't own a car, or you delay owning one, and you avoid roughly $10,000, maybe even $12,000 a year, which is about what it costs to, on average, to own a car. That's money that's no longer disappearing into gas, insurance, and depreciation. Now that money has options to grow. This is what people don't understand: the opportunity cost of having a car. That money, you can put it into learning a new skill, you can save it, or you can even invest it. For example, let's say instead of you spending $10,000 a year to own a car, you invest that money into the stock market instead. If you had taken that $10,000 in 2020 and put it into just a regular Google stock, that investment would be worth close to $22,000. The point is opportunity. When you tie up tens of thousands of dollars a year over multiple years in a car, that money never even gets the chance to grow into something bigger that can change your life. And another angle most people overlook is also location. A lot of people, normalize long commutes as 45 minutes, sometimes even an hour, without even doing the proper math. Now, yes, maybe living closer to where you work can cost a little bit more, let's say maybe $200 or more per month in rent. But if that means you drive less, spend less money on fuel, reduce your wear and tear, and get those extra hours for you to do stuff, that trade-off can actually save you a lot more money overall. I know tons of people that drive 30 minutes to 45 minutes to even hour and a half just to get to work because they think it's saving them money, but in reality, it's actually costing them a lot. So when you think about cars, don't just think about the purchase price, think about what they cost you every single year. Think about what they prevent you from doing with your future, and think about what that money could become if it wasn't tied into something that loses value every single year. If this changed the way you think about cars and money, let me know down in the comment section. I'm curious to see what stood out for you guys. That was it for today's video. Hope you guys learned something new. I'll see you guys in next week's video, and as always, keep hustling.